Hey guys, welcome back. Now, let's be honest, it's not been a great start for crypto or stocks in the first week of 2022. In fact, at the time of this recording, the S&P is down 2.5%, crypto is down 10%, and Cathie Wood's flagship fund, ARKK, is already down 13%. Some of the biggest bears are comparing this market to the .com bubble, saying we are on the verge of a 90% crash. So what is going on? Cathie Wood is one of the top money managers right now, looking after a huge $68 billion of investor money. So what does Cathie Wood believe is going on? And more importantly, what happens next? So in this video, we'll be looking at what just happened to cause this downturn. I'll break it all down and explain exactly what is going on. Then Cathie's thoughts on this potential 90% crash event. And then we'll finish with why she thinks we're on the verge of a reversal, which is going to lead to some spectacular gains. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, so it was the crypto market that took the biggest beating last week. So what on earth happened? Ready? Let's do this.
What has riled the market in the last week or so is Fed minutes being released suggesting that the Fed is going to become more aggressive at raising interest rates, perhaps sooner than many expected, maybe in the March timeframe. Now, what we believe has happened here is that the Fed, having suggested that inflation was transitory, since the beginning of the coronavirus, was becoming concerned when it saw CPI inflation, headline inflation, year over year at 6.8%. And it does not want to be blamed for inflation being sustained and certainly not moving out of control. But they want to err on the side of hawkishness or being too tight right now, certainly from a jawboning point of view, because they don't want inflation to continue to escalate. The rotation is still towards value. It is hurting growth. We think it's long in the tooth. We think it's going to end, but it hasn't ended yet. I do want you to know that, of course, we've been through a very difficult time since the significant rotation from growth into value started nearly a year ago in mid-February.
So let's unpack what is going on. Basically, the drop was caused by the Fed saying that they may be raising interest rates faster than expected. And basically, this caused a rotation from growth stocks into value stocks. So let me quickly explain growth stocks and value stocks and how interest rates affect them both. So think of value stocks as the big, stable companies. They don't grow as fast anymore, they have large cash positions, and they are deemed a safer investment. Now, growth stocks, and crypto also falls into this category, are generally the smaller, innovative companies that grow a lot faster, but they're also deemed higher risk. Now, when interest rates go up, how much it costs to borrow money or the cost of capital also goes up. Now, this doesn't impact the big, safer companies as much as they have lots of cash and stability, but the smaller tech stocks and cryptos do rely on raising capital for their growth. So the threat of interest rates going up caused a rotation of investor money from growth into value, as these investors were just playing it safe and then ironically did in fact cause a drop in price. Make sense? Okay, moving on. What is all this about a 90% drop?
Since February, as this rotation into value from growth really accelerated, these same algorithms have had good success with this strategy. They've been focused on inflation fears, interest rates, and valuations. And they have likened what we're going through right now to the tech and telecom bubble and the bust. And so the algorithms as well are basically looking at momentum and saying, once the bubble pops, that's what they're calling this, it doesn't stop. It's 80, 90%. We think that is a vestige of the tech and telecom bubble and bust. A lot of strategies started moving towards benchmark sensitivity because of the tech and telecom bubble and bust. And they really stopped focusing on true innovation, transformative innovation, disruptive innovation.
So the question is, are we about to see a 90% drop similar to what happened in the .com crash? Well, in the year 2000, the internet was just getting started, and hype around internet companies led the market to begin an epic climb, sucking everybody in like a black hole before one of the biggest crashes in history. Well, the thing about rotations is that yes, growth can rotate into value. However, markets are cyclical, and it's only a matter of time until investors begin to feel comfortable, the FOMO begins to intensify, and then value begins to rotate back into growth. So, to finish, what does Cathie Wood believe is going to happen next?
The rotation is still towards value. It is hurting growth. We think it's long in the tooth. We think it's going to end, but it hasn't ended yet. Where are the crazy valuations now? Are they in our stocks? Now that Zoom is down to 33 or 35 times this year's earnings? Or is it in an auto stock where there might be losses? And what's that PE ratio? That's infinity. That's where the bubble is. And I think you're going to see a lot more cases in point as this year moves along, and the innovation that we see evolving so rapidly, DNA sequencing, transforming healthcare, robotics solving the labor shortage problem we're having, energy storage, the consumer preference towards electric, artificial intelligence, which is the glue that is helping all of these technologies converge. And the last one, blockchain technology. We think that we're in a period of innovation that was the dream in the late 90s. But those companies were vaporware. They were based on nothing but eyeballs. We have real revenues. We have incredible growth rates. And if we're right, and the economy has an inventory problem, then our growth rates are going to look far superior to anything you'd find in the value space. And we are really looking forward to that.
Crypto and growth stocks have not had the best start of the year. Once investors found out about the Fed's plans to potentially raise interest rates faster than expected, this led many investors to rotate from growth stocks into the safety of value. Some investors believe we are on the precipice of a 90% drop, similar to what happened in the .com bubble. However, Cathie Wood believes this time is different. She says the tech companies of today do in fact have legitimate sales, unlike in the year 2000 when the companies were just based on vaporware. She believes the rotation back to growth is coming, and when it does, she says,
our growth rates are going to look far superior to anything you'd find in the value space. And we are really looking forward to that.
So there you are, guys. Hope you enjoyed. I have to say, I do hope she's right, as I certainly would prefer a rotation back to growth instead of a 90% drop. And let me know what you think below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.